Hello and welcome back to Bunnex Investment Group. In this video, we are going to be talking about a very simple strategy that has the potential of earning you 2,000 plus pips per month. Of course, after being applied on several pairs. But before we jump into this whole video, please make sure to check out our free Telegram channel. The link is right in the description box below. So this strategy utilizes the daily time frame. The daily time frame will create either an upward or a downward trend. And we define an upward trend as a trend whereby higher highs are broken to create new highs. Like in this case, we had a flow up, pullback, and breaking of this high, creating a new high. So our points of market interest are the ones whereby we expect to see the smart money coming back to pick up orders in order for them to create what we call liquidity in the markets. So it's basically a retest of the broken zone within the market on the daily time frame. So after a retest of that broken zone in the market, we'll expect to see a setup that is tradable from a much lower time frame. In this case, we can see an example whereby we created a high. After this high was created, we saw the market going up past this high region and then came back to retest that zone. And within this zone is where we refer to as the zone of market interest. Then we can see that the market broke this high again and came back to that zone of interest again. So within these zones, that is where we would expect to see the market issuing patterns that are tradable from a much lower time frame. So in some instances, we would see that the market may break the high, but will fail to retest the high, the region of the high that has been broken. In that case, we would expect to see the market giving us a double bottom on that particular daily time frame. Therefore, this first part will actually give us the zone of market interest. Therefore, we'll be looking to get an entry pattern on the second leg of that particular daily time frame. Then, of course, if it issues, another zone would enter on the much smaller time frame. So I know this is theoretical. We need to actually apply it on real charts for us to comprehend this concept. So let's go over the charts to see how everything goes. So this is euro against dollar. The first thing that we've said is to determine trend. So from this point, we can see that the market has initiated a downward trend. So from this downward trend, where we are interested in are the points or the zones where the market broke the last low. In this case, since it is a downward trend, we can see that from this point, this was the last low, which was broken by the market. We had the first last low broken. Then the market created another low, which is this one. And it created another low, which is this one again. So we would expect to see the market come back to retest and pick up the orders that are left within this region. So for us to be able to trade, we now need to go on the H4 time frame to see a pattern within this region of interest. And the most accurate pattern that we can take within this region is actually a double top or a double bottom within the H4 time frame. So going on the H4 time frame, this is what we would see. Any retest and pull back to that same region is a valid pattern So the first zone that we drew on the higher time frame is this one. This is the region of interest that we drew on the higher time frame. We had several touches at this point, 1, 2, and 3, and this one, and the stop loss must always be above the structure. Actually, this was the second one. Let's go back in history to see the first point that we drew on so this is the first point that we drew on the daily time frame, where we can see that the market broke this region, went down and came back to retest that region. On the H4, it gave us these 3 pins to the high, which were actually a point of entry after a proper reversal candlestick pattern was issued. And we can see that the market gave us a lot of pips from this region. We can see that it was $19 down to, if we were to hold this, we can see that we had hundreds of pips from that region. Then the next point of entry was this one, where the market actually broke this region and came back to give us a point of entry, and it went down. So right now it is proper for us to assume or anticipate to see the market come in this region and give us a setup. So basically that is how you will be looking at this particular strategy. So in the case that you have not been issued the break and retest in a proper way, we said we have an example. From this point we can see that the market broke this last lower high, right? In this last lower high that was broken on this particular one, we came back to retest the region. Then we went up and broke this high. The new high was broken, but the market now failed to come and retest this region. Therefore, from our template that I have illustrated earlier, we need to see a double bottom on that particular time frame for us to get a zone of market interest. So within this point, at this point, we were expecting to see a pattern on the H4 time frame. We needed a pattern on the H4 time frame to actually enter and benefit from this particular move. So as I always say, whenever you get a new strategy, you need to backtest it so that you'd see if it's convenient for your style of trading. You can as well modify several things to make it favorable in your style. December is a month of learning. Learn as much as you can in preparation of 2022 trading year. And as I said in the previous video, we have an upcoming boot camp that is actually going to take place on the 13th to the 14th of December. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and don't forget to check out our Telegram channel. See you next